If you're clicking on this as a parent thinking, how am I going to save for my kids' college? I want to know any possible strategy out there. It's not just a 529 plan. No, we use a concert of several strategies together. And how can I get the biggest return to build my college savings account for my kids? And it can be completely tax deductible too, which is weird.
The secret sauce, and I don't want to bury the lead here, is you're going to self-direct it and invest that account, these tax advantage accounts, the Coverdell account, the Roth IRA, and assets you know and believe in that are going to do better. The target fund you have to do with the 529 or the mutual fund or stock you were thinking about with the Coverdell. It's about investing these tax advantage accounts that you can use for your kids' college into assets you believe in that can grow. And we've seen clients do this at our company, Directed IRA. I've seen the expense payments go out to Ivy League schools where the parent invested a Coverdell for their kids into real estate transactions, had phenomenal returns on them. They put them in incredible deals. And then that got the gain back, no tax. The money went out totally tax-free to pay for their kids' college education. So awesome strategy here. We're going to unpack some of the pieces to it, but that's what we're talking about.
We're going to combine this self-directing strategy. And some of you maybe never heard of that. And self-directing means investing in alternative assets or the businesses and assets that you understand, that you know are going to get you a better return than a Wall Street product. And combining that with the Coverdell IRA, which, yeah, it has a terrible contribution amount, but that's okay. A little acorn can turn into a big tree. And so we want to be using that Coverdell strategically with this self-directing strategy.
So now keep in mind, with this Coverdell, you can put in $2,000 a year. And that's where you're probably like, well, $2,000 a year? You know, how's that going to cover my kids' college? Well, it's the investment gains and returns we're talking about and how we want to build this. We have clients using Coverdells, like I said, for real estate investments. We've had clients use Coverdells for crypto. You could do a crypto Coverdell IRA. We're going to get to kids' Roth IRAs here in a second, another pretty cool strategy. But these unique type of accounts are accounts you can use as self-direct. Now, I want you to know, most of our clients are buying real estate, private funds, startups, small business, crypto with their IRAs, trying to build for retirement. And it's a very popular strategy. We have over $2.5 billion in assets. We're opening up sometimes 30, 40 new accounts a day of clients doing that. But it's not just about your IRA and retirement. This is a way you can fund your kids' college.
Hey, I'm cutting in here because I want to make sure you know all the stuff I'm talking about on my YouTube channel, investing in alternative assets, whether it's real estate or private funds or private equity, oil and gas, crypto, saving on taxes, all these concepts I love and I talk about here. I want to let you know we do this at my company, Directed IRA. So get on over to directedira.com/call and book an appointment with one of our self-directed IRA specialists that'll help you understand how to take control of your retirement.
Whether you're starting a new Coverdell, you might have a Coverdell already. Maybe you've got a Coverdell broker-dealer or something you've been doing for your kids. Those can be transferred over. And this is a qualifying account. So when we're talking about these Roth IRAs or this Coverdell, this is the same account you could do at a TD Ameritrade or a Charles Schwab or Fidelity. The difference is we don't restrict your investment options. We'll let your Coverdell or your kids' Roth IRA invest in crypto. We'll let it invest in a startup. We'll let it buy a real estate deal, the water rights, the oil and gas deal, whatever it might be. These are assets that these accounts can own. You just can't do it at a broker-dealer IRA. So that's what we're doing at Directed IRA with many different account types, including, of course, the Coverdell.
Well, Matt, let me just at least talk about your contribution procedure if you're a high-income earner. The current rule is you can put this $2,000 in, but some of you are already smart enough to go, well, if you make more than $100,000 single or $200,000 joint, I can't put the money in, but grandma and grandpa can. Very similar to the Backdoor Roth strategy, just like you can't put money directly into the Coverdell if you make too much money, you can gift the money to grandpa and grandma who can put that money into your kids' Coverdell at the same location here at Directed IRA, or create that self-directed account and then combine it into that LLC. So do not be misled by your accountant who may go, you make too much money to do a Coverdell. Hey, your accountant is not getting the real story that you can gift money and go in through a backdoor method, just like you can with a Roth IRA. Some people are like, well, I make too much money to do a Roth. No, you don't. Anybody can have a Roth, and that's called the Backdoor Roth strategy. The Coverdell is available to you. You can invest with it, and then Matt, I love it when you combine it with the kid Roth.
The thing on the kids' Roth IRA is they have to have earned income. All right, so if you business owners, you own a rental property, you should be paying your kids, get them involved in the business. If they can make $7,000 a year, by the way, you're expensing that in your business anyways, taking a deduction for it. Your kid's picking it up, and they're not even having to file a tax return because they're under standard deduction. It's not even taxable income to them, and they're dropping it right into a Roth IRA. Now, they could also be working a summer job or something and spending all that money money on things that kids spend money on, but you're still throwing in the 7K because they had that much money in earned income. So that's the one caveat on this kid's Roth. They must have the earned income, but you can establish that account for them. You can help them with it. You can have the responsibility on the account until they hit the age of 18 or the age of majority in your state. But the nice thing about the kids Roth IRA, there's a number of things about it, is one, we can go invest it in all these things we're talking about here. All these same assets we're talking about for the Coverdell and self-directed IRAs in general, your kids Roth IRA could be investing in those types of investments, helping them grow, teaching them about what it's investing in. But one thing about the Roth IRA, you're probably like, well, Matt, that doesn't sound great. How does this help my kid in college? Well, the investment gains and returns in a Roth IRA, you have to wait till you're 59 and a half. But the $7,000 a year you pop in there, let's say you've done this for 5 years for your kid, they're 13 and they're starting to work in your business, and they do it for 5 years until they're age 18. They've got $35,000 of contributions in there. Maybe the account's worth 70. Let's say it's doubled over that time. That $35,000 of contributions, you can pull out whenever you want, no penalty, no tax. Contributions to a Roth IRA can always come out, and then let those gains be something left in there that they can continue to invest and grow and have a head start with the Roth IRA. That part they're going to wait till they're 59 and a half on. You get an incredible head start. Meanwhile, this money they've been putting aside, the $7,000, they're able to pull out for college or other education, frankly, to start a small business. There's lots of other qualifying things. Doesn't have to be qualifying, frankly. They can do whatever the heck they want with it. But let's help them do something smart with it, like college, start a business, something like that. Mark and I have even done this with our kids. Yes. Working in our businesses, helping them contribute to kids' Roth IRAs, paying them from the business for legitimate work that they're doing. And I remember even working on my dad's rental properties when I was a kid. I wish he knew this strategy. He would have loved this strategy, you know. I was out there mowing a lot of lawns, you know. I would have loved a head start on a kid's Roth IRA. These are strategies we really think can take you to the next level. These are things that are maybe outside the box, but you know what? A lot of our business owner clients, entrepreneurs love the outside the box stuff. That's where they thrive and excel. And this is a strategy that has a ton of upside and potential. A lot of great tax benefits. You can be focused on the things that matter, whether it's sending your kids to college, helping them get a head start with the kids' Roth IRA, which could be used for college. Again, the contributions gives them a head start on the investment gains. You can also use that money to start a small business or even a technical school. So there's a lot of great perks and reasons this can benefit you and your family. Thank you, everyone, for listening. We hope you found this valuable. Please make sure you're subscribed to the podcast, sharing with your friends and family. Give us a 5-star review. We'd really appreciate that. We'll see you next time. Till then, stay calm, self-direct on.